Well, as we were just discussing, we got a fresh read on the labor market this morning. 243,000 Americans applied for unemployment benefits last week, matching a near one-year high. That's according to the U.S. Department of Labor. New claims rose by 20,000 in the past 7 days. For more on what this means is our very own Madison Mills. So more weakness, Maddie, moving forward, especially the data that we got today.
Yeah, it was definitely giving an indication of, oh no, what's happening in the job market. We're seeing more unemployment, scary, spooky, bad, but you guys are smart. You watch Yahoo Finance, you read our coverage, so you know that there's actually some news under the hood that makes it look not so tough. I'm going to run through some of that now. So initial claims coming in, like you said, Allie, higher than expected for the week ending July 13th. It was a jump of 20,000 here, but Bloomberg Economics saying that 13,000 of those that uptick of jobless claims was driven by seasonal factors. So that's not likely to stick around and mean anything about a sickness within the broader jobs market. So what are those seasonal factors? Earlier on our programming, we had Stephanie Roth from Wolf Research talking about how there's a climate change impact going on here, a climate impact rather, hurricane season potentially leading to some unemployment numbers going up across the country here. We also know that over the summer, some of the automakers do this seasonal retooling, which leads to these auto plants shutting down. And that led to an uptick in a lot of areas that are driven by the auto space. For example, Michigan, New York, and Indiana, all of those were the biggest states that saw the biggest uptick. And that is driven primarily by the auto space when you look under the hood in this data here. But it is not, the time to just totally slough off concerns about the job market. We had President of the Federal Reserve Bank of Chicago, Austin Goolsbee, on our program with Jennifer Schomburger earlier today. And he did say that the job market, the labor market, is something to take a look at, that the Fed is watching it. They are concerned about the jobs data and unemployment ticking above that 4 handle in the last jobs print coming in at 4.1%. But even that could be good news, because if the Federal Reserve does cut interest rates, that could lead to CEOs being less freaked out, and that could mean less layoffs to come. So good news even when there's bad news.
Yeah, and I'm reading through some reaction from Wall Street. Goldman Sachs saying we may be approaching an inflection point at which further softening in labor demand results in a bigger and much less welcome increase in unemployment. And I feel like the unemployment rate, that's been something that the Fed has been super focused on, a lot of these Fed officials as well. Do you think if we see an unemployment rate that goes significantly above 4%, could that potentially signal a hard landing to come? What does this say about really the future of this economy and the consumers within it?
Yeah, well, if we go above 4% for 3 months in a row, that could trigger something called the SOM rule, which is a fancy thing that economists look at to basically indicate that this actually is bad news within the labor market. And that would be an indicator that the Fed stayed high for too long and that we are seeing a little bit of a hard landing. But even Claudia Sahm herself, who created that rule, has said that this is just a very unique market and that some of the weakness that we're seeing, it's coming from white collar jobs, for example. It's not coming from the pockets of this economy that are going to show up in that broader headline data. And so that could even be an indication that there's just some murkiness in this data that's not necessarily being as clear as possible for the Federal Reserve moving forward. We have guest after guest coming on and saying that the Fed has engineered the soft landing that they've been looking for. And you can see that in their dual mandate. They look at not just the labor market, but also inflation. And we are seeing inflation data getting closer and closer to 2%. But the big question will be what that data looks like come the rate cut that we've been teasing out for years and years.